Hey guys, Rafi here from the Endgame Investor. We got a lot to talk about today, a lot happening in the silver market, a lot happening in the palladium market. I'm going to bring those two things together. JP Morgan is selling a whole bunch of silver, 14.2 million ounces over the last 2 days, bringing them from eligible stockpiles to registered to sell against contracts. That's a total of 2,850 contracts of silver they're selling, and silver goes to delivery in 2 days. Palladium also goes to delivery in 2 days, and some whacked out stuff is happening in palladium. We're also going to go into the COTs in palladium, the commitment of traders report, which is which categories of traders are in what category. Are they short? Are they long palladium? You'll see these numbers are really unique. They've never happened before in history, and something is happening in that market. The first thing we're going to talk about today is JP Morgan. They're up to something big. JP Morgan, over the last 2 trading days, Friday and Monday, has put for sale 14.2 million ounces of silver. This is their eligible stockpile. Eligible is not for sale. Now, keep in mind when you're looking at this, it looks like a huge pile, but 103.176 million of these ounces, of these 117 million ounces, 103.17 of them belong to SLV, so they cannot go for sale, at least not legally. We have here a stockpile of 117 million ounces, 103 belong to SLV, so that's about 117 minus 103 is 14 million ounces, a little less than 14 million ounces left that they could possibly put for sale in the registered category. That is less than the amount of silver they already put for sale over the last 2 days. They put 14.2 million ounces for sale. Why they put 14.2 million ounces for sale? Probably because they got to cover a big short position when silver goes to delivery over the next 2 days. Now look at this red line. This is where the supply is now. You can't see it here because I can't zoom in on this chart, but we're down here at the 117 million ounce mark, and that is below this low from July 2020. This is when they shuttled 30 million ounces of silver from the eligible stockpile to the registered for sale pile in July 2020, or right before July 2020, when those record amounts of deliveries are being made. This is the second biggest drawdown in eligible stocks to sale since then, second biggest ever, I think. So what I'm saying is JP Morgan is almost out of silver to sell. This is very exciting. Now we're going to move to palladium. Something even bigger is happening there, I think. So first of all, here's the palladium physical premiums I got from Gold Charts or Us. You can see here that they're at 14.1%. This is a high since the 2008 financial crisis. Now I want you to look at what happened here with palladium premiums. This was the financial crisis here, and palladium premiums, physical premiums went from about 6%, it looks like 6.5%, to just under 30% in a matter of days. Now, what was happening to the physical palladium stockpile at that time? Well, we go to the next chart here, and right where 2009 hit, which is right where that, this is not to scale, right? Because this is a different length of time here. I can't really adjust these charts. So this is where that huge premium spike happened. And you see here that the physical stockpile went from down about 100,000 ounces, right? That little, spike down here. That was encouraged by the spike in premiums. And how many ounces do we have now? Here we have the palladium commitment of traders. The red guys are the non-commercials, the speculators. They're almost always long palladium because they're speculating on the price. They go long. And the commercials meaning the producers of palladium and the bullion banks, the swaps, the market makers, are almost always short. They're almost always in the bottom in the blue. Except now, the situation is reversed. You see here that now the blue is on top, the red is on the bottom. This almost never, ever happens. It means that the commercial palladium producers are now long palladium. Why would you be long the metal that you produce? And the speculators are short palladium. And look at the price of palladium since this reversal happened. It's been going down and down and down. The hedge funds, the speculators in palladium futures are now short palladium to a degree that they have never, ever been, going back all the way to 1985 when palladium futures began, or at least the COTs for palladium futures began, and we began recording who was what. So when did this last happen? It happened in the mid-90s. You see here, you can barely see it. The red is on the bottom here and the blue is on the top, just like it is now, but much more extreme now than then. And in that time frame, what happened was a huge palladium rally. Because look, if the speculators are short and the producers are long, and the producers have every incentive to hold for delivery and force the speculators to deliver on palladium that they don't have. And that creates a palladium price spike, and it's good for the producers because that's what they produce. Gold COTs, same here. The reds are the speculators and the blues are the commercials. We see here the last time that the reds and the blues flipped. When was that? Ooh, look at that. February 2001. Remember February 2001 when gold hit a bottom of $253, and that was the all-time low that we'll never ever see again? Well, that was February 2001, specifically when the red was on the bottom and the blue was on the top, meaning the speculators were short and the commercials were long gold, and that was the ultimate bottom. We saw a very similar situation, almost, where the red and the blue switched. Not quite, they didn't, but it got very close during the 2015 gold bottom. And here they switched for maybe a few days during the 2019 bottom, indicating that it is a major bottom, very likely. I'm not making any recommendations. I don't do that, but I am personally long palladium for my own personal reasons. And now we see that Argentina, going to Argentina now, is trying to fight its own hyperinflation with a hike in interest rates. This is a historical chart of Argentinian interest rates going back to the early 1980s or maybe late 1970s. We can see here that interest rates do not stop hyperinflation. It doesn't matter how much you hike them. Once the hyperinflation kicks in, interest rates don't matter. They can't stop it. So we see here in the late 80s, early 90s, the Argentinian central bank hiked rates to 1,400%, did nothing. The currency died anyway, died here in 2000 with this hike, and it's dying here again with this pathetic little hike to 100%? Who cares if it's 100%? If it's hyperinflation, the interest rates do not matter. Going to silver. Silver is pivoting off of a historic support zone going back to 2020, and it goes back even further than that. We'll go to that in the next chart, but that's 22.25, and that is exactly where the 50-week and 50-day moving average, 50-week and 200-week moving averages are now, or just around them. 22.25, we see that support zone being hit here once, twice, 3, 4. This could be 3, so 3, 4, 5, 6, 7, 8, 9 times since 2020, and we have bounced strongly off it. We're now even higher than this. I think we're around $25 or something, maybe 24.5. Don't know exactly, but if we go to the next chart, we see that this support zone is even bigger than what we see here. Going back to March 2008, it's been bounced over here. This is the recent bouncings that we saw in the last chart. Here, it was the high in 2008. It was the point that started the parabolic run to $50 in 2011. Once we broke through that, silver just went completely vertical. Here it was a resistance zone, and here it is support once again. This is a major zone here, and if this is conquered, we might never cross it again.